All right, welcome everyone. Welcome to the market view commentary for July the 19th. Diddy Sharp, glad to have you with us. I understand that she is an active trader. We will probably need to get you our Tuesday nights and our Thursday morning trade findings and adjustments link to you so you can see more of some of our active trades. Chances are we'll be canceling our trade findings and adjustments tomorrow. I'm traveling in the morning while Keeve is watching the market. Keeve's traveling in the afternoon, but I'm leaving early. I'm up at like 3 in the morning to go do a 9 or 10 hour drive, trying to get in about 720 miles. And then Keeve's taking off in the afternoon, which means I might just be too tired, but I'll keep you posted. Okay, here we go. A yes or a no question. How many of you panicked today? And it's okay to be honest, but how many of you panicked today? Because there were times when I'd see the market and I'd be like, oh, geez, this isn't going to work. What am I going to do? Some of you are here that are relatively new, but wow, unbelievable. No, I've got 5 no's in a row. No, but I did say phooey. I just thought it was a political move. Yeah, I mean, I just have 1, 2, 3, 4, 5, 6, 7, 8. I have 9 no's out of the gate. That's almost half of you. We've got 31 here today. I guess that's a third of you. There we go. 10, 11 no's. So I've got 11 no's and 1 maybe. And someone said a polite swear word. All right. It's pretty neat because for me, today, I had 3 phone calls. 1 for moving money over, 2 for the need to withdraw 600K from Coda and 800K from Hurley Investments. So we lost about $1.4 million today, but it was pretty neat because both let us know the money would come back and it would increase over the next 2 months. They need it for closing on houses or borrowing. I'm not really exactly sure, but it was pretty interesting. We had to clear some money last Thursday, Friday. $1.4 million went out of Hurley Investments today. Not a big deal. Now, pretty neat when someone today said, hey, I think I need to do what you're doing. And it really comes down to, and I see a couple new people here, Diddy, William, and Randy. You guys are the new ones. Everyone else, think about this in your head. What is the probability? I'm also going to put in here maybe a different way to say it, odds of making money in the stock market. I'm asking that because a lot of people ask me if the stock market is rigged or if the stock market is stacked against you. And I just now read Abraham that said nobody asked for a couple counseling. No. In fact, there are 2 people that I feel like I've taught this to, but kudos to both of them. Neither one of them called me today, which I felt was impressive. But okay, Diddy, I don't see an answer from you. Randy, you said 50-50. Who else did I ask? Diddy, Randy? Whoever my third person was, go ahead and answer. What is the probability of odds of making money in the stock market? Randy's changing the call or the number to maybe 60-40. Aha, we have an optimist. The odds are 100% you'll make money in the stock market. That actually is not correct. And Diddy, good job. She a little new here. All right, and it really comes down to this. Simple odds, right? Simple odds. Stocks go up, down, and sideways. I have seen people lose money for decades. We actually have a lost decade from 99 to 2002 or from 2000 to 2013. Last decade and a couple years. Stocks go up, down, or sideways. You make money when the fund, stock, ETF position goes up, which is equal to a 33% or a 1 out of 3 chance. You lose some money when it goes sideways or down, which is equal to a 67% chance or a 2 out of 3 chance of losing money. Well, Kevin, you know, they're mutual funds, they're this and that. I get it. Diddy, I'll go over with you, and Randy, I'll do the same thing. I'll go over with both of you where I'm coming from. Sometime we'll have to go over the mutual funds, and I'll pull up an old presentation I have. But yes, if you were to ask me, is the stock market stacked against you? I would say undoubtedly yes. Couple things people can do to make sure you're not losing money. Take profits, book a profit, book the gains, pay your taxes. Hopefully it's long-term, right? Long-term capital gains, and find new opportunities. That's the first way to do it. The second way to make things different, change the odds into your favor, which means make it a 2 out of 3. And a couple people asked me, well, Kevin, I'm not sure I completely understand. Yes, we lost money today. On 20 million, today's net gain, we're down 209, right? This is Coda Hurley put together. We lost money. But if we take a look at Apple, Apple shares lost 85,000. We made up 53,000 of that downward movement. Here's a great example where 5/8. What is 5/8 of a? I'm going to do quick math for you. 5 divided by 8. We made up 62%, 62.5% of the downward movement. We have a position that makes money as stocks go down. We have a position that makes money as stocks go up. It was a great day for the shareholders of Apple at Hurley Investments because we changed the odds. The odds are a 2 out of 3. Bank of America that's getting pummeled right now. Take a quick peek. The stock was down 32,373. Our puts made up $32,046. This is how you create a 2 out of 3 opportunity to make money. We have $53,000 that we need to capture on those puts and convert those into more shares. For everyone that's in Bank of America, we are going to dollar cost average for you without asking you to put more money in your account. We're going to amass more shares of Bank of America without telling you to go stick another $100,000 into your account. What do we have here today? On $1.7 million, we lost $33,000 today. Our protection made up 23. 65% of the downward movement today on Baidu, we were able to make up. Ford's looking ugly, right? On the 4,800 we lost on Ford, we made up $3,600, 75%. Facebook, you know, nothing like having $700,000 in Facebook. Facebook today lost 8,800. On our protection, we made 5,800. We also shorted a little bit against it, another 800 or 745. We basically made up 6,600 of the 8,800 Facebook lost today. What I'm doing is going over core holdings so you can get an idea of what your core holdings are doing. Disney, we've got $3.3 million in Disney. Today, Disney lost $122,000. We made up $95,000 of that downward movement. I'm going to go through a couple more. I know Under Armour is a big one for us. Under Armour, 1.1 million, lost $22,000 today. Can someone tell me, how did we do an Under Armour that lost $22,000 today? Kevin, your insurance made up roughly $1,000 more than Under Armour lost today. That is what we're doing at Hurley Investments. You can have a down day in the stock market and you can make up more money than what your stock lost. That is how we're changing the odds to your favor, or giving you a 67% chance of making money over time. Let me bring that into a little bit of an understanding. First thing you have to understand, averages are not your friend. Diddy and Randy, I'm going to ask you again one more time. When I say averages are not your friend, if you gain 50%, then lose 50% of a portfolio for a 0% return, how much is each single dollar worth that was invested? So really quickly, if your portfolio gained 50%, lost 50%, or vice versa, lost 50%, gained 50%, you have a 0% return. These happen in 2 to 3 year cycles, sometimes 5 or 7 year cycles, especially the last 20 years. If you have a 0% annualized return, there's the key word, right? I'm going to go ahead and I'm going to put it in here. Annualized return. How much is each dollar worth? There you go. So here we go. Randy says $1. If your dollar gained 50%, lost 50%, has a 0% return, it's worth $1. Diddy, what do you say? Same. Randy and Diddy says it's $1. And I just pulled the wool over your eyes and lied like a stockbroker does. Because let's do the math. $1 that gains 50% is equal to $1.50. Then loses 50%, that dollar is only worth 75 cents. Anytime I hear someone talking about an annualized return, I'm going to admit my first comment is, damn, are you dumber than dirt? Especially if they've paid for or gone through an education, especially if they've heard me at all over the years. This is the biggest problem with stockbrokers, is they give you an annualized return, and you think that annualized return is a linear gain in the stock market, because annualized returns equal a linear gain on your investments. It equals compounding interest on your investments. And I'm going to politely say this, that you're an idiot if you think the stock market moves linear and that you've ever received at any time on God's green earth a annualized return on your portfolio. It never, ever happens, which is why if anyone's ever paid for a financial plan, there has never been a financial plan that has ever worked in the whole history of the earth, because they give you an annualized linear return on a variable return stock market. If you've ever heard a stockbroker want to give you a financial plan or talks about annualized returns on mutual funds, ETFs, past performance, your first comment to them should be, what kind of stupid are you? And why would you lie and try to cheat me that way? Don't buy into the crap. You should learn. You can get an annualized return of 11, 12, 13% annually for 10 years, and you've lost as much as 33% of your portfolio. Do the freaking math and don't get taken by a loser. Pretty neat when you get to pick up another million too. When someone finally does the math and goes, you know what, Kevin? I think my broker's been cheating me. Of course they have. Next question for the group. Do stocks go down faster than they go up? What do you guys think? Give me a yes or no. Give me a huh. What do you think? Good answer, Mike, by the way. Do stocks go down faster than they go up? Of course they do. There goes Diddy, Randy, Mike. Russ, I'm going to talk about that in a second. Of course they do. In fact, on average, a drop or a correction can occur somewhere between 30 to 90 days, and to build it back up takes somewhere between 18 months to 3.5 years, which again is the principle. So how much do I have to make up to get back to break even? And here's my simple numbers for you to look at. It's huge. On 10%, you need an extra 1%. On a 20% drop that happens all the time in the market, especially over a 6-week period during earnings, you need a 25% return. I'm sorry, we have stimulated the crap out of our economy we've got a 30, 40, 50, 60% drop coming up, which means at 30%, we need an extra 13%. You need a 43% return. On a 40% loss, you need a 67% return to get back to break even. On a 50% loss, you need a 100% return. And on a 60% loss, you need a 150% return. The key is adding shares or making something up on the way down. That's the key to beat this, because if you add another 10 to 20% more shares of stock as they fall, you now have 10 to 20% more shares of stock as they come back, which is how you beat these numbers right here. If you lost 50% and added 100% more shares of stock, your break even is the cost of that insurance you paid for it. As you make 5% back, still down 45%, you've broken even. If it comes all the way back, you're at a 95% return. These are real simple numbers. And Diddy and Randy, I'd like to go over both of this with you in a different presentation, probably next week. So Diddy and Randy, make sure you email Keeve or myself and say, hey, I want to go over your introduction presentation with you guys. It'll take a quick 30 to 40 minutes, but I'm going to go over to work these numbers with you so you can see them. This is the key. The key is to make something. It doesn't always have to be shares of stock. If you're only going down 10%, if you can make 1% of that downward movement, when they come back, you're going to be back to break even. Someone mentioned to me yesterday, in fact, I'll just admit it was Jeff. Jeff said, well, it seems to me you're just waiting for things to come back. Bingo! That is it. That's exactly what we're doing. We're taking some market risk by adding protection on shares. Guess what? We don't get it always right. But we add share counts. We add, even if it's just something on the way down, 1% makes it easier to wait when we come back up. It really is that simple. It's that simple, and that's the key. Making something up on the way down so when they come back, you're now profitable. That's exactly what we're doing at Hurley Investments. The Hurley investment methodology is to call or trade or to add protection so that we can add shares for a higher bounce back up. And when I say higher, I'm going to say a higher percentage return as stocks bounce up when things come back. That protection, that 2 out of 3, having 2 different ways to make money, beats market risk and market timing. And again, we do not get it right, but this is how, since 2008, we've been able to double portfolios in 4.5 to 5.5 years. Sometimes after 2008, some of you are here for that, we doubled portfolios in 2 years. By 2010, we were profitable. 2010 to 14, we were working on it. A couple of us got caught up in Boeing. We weren't able to double portfolios. But this is our time frame on what we're trying to do. Double a portfolio every 4.5 to 5 years. In case you haven't noticed, we're not perfect, but we're doing a hell of a job. And big money's starting to take notice. Last week, the S&P fell down 1%. Basically, it was the first week in 4 that we went negative. Better than expected reports from Goldman Sachs and JP Morgan. Also, you can stick a couple other ones in there. I want to say Morgan Stanley. Wells Fargo wasn't good. Bank of America was better than expected. But banks were not rewarded. And I've got an article about inflation. But we've got what I'm going to call targeted inflation that are holding down our stock market gains. We're also having a rise in COVID infections here in the United States and worldwide. So COVID is rearing its big head again and saying, we're in trouble. Energy sector came drop, a big drop, 7% in one day, as gasoline stocks rose and the price of gas rose. Saudi Arabia and United Arab Emirates reached an agreement on dispute that the collapsed OPEC talks earlier last month could increase the supply to safe rising demand. We have an idiot for an administration that cut off our oil supply. We went, and again, things are a little bit different with COVID, but we went from having a surplus of 3 million barrels a day to now having an extra demand of 4 million barrels of oil a day. We were stupid to cut off the pipeline. We were stupid to give us more oil to be able to refine that would give us more oil to sell and have for ourselves. It is not the smartest thing to do. We have some pretty good earnings that'll move our markets this week, but let me just put our earnings dates here. This is updated. Not a whole lot on our side this week. When I say not a whole lot on our side, I think we've got Coke and Verizon this week, and that's about it. A big bulk of the Hurley Investments core holdings are going to report next week. Where will our markets end this week? I'm going to say lower, doing nothing more than following the trend, because the Dow Jones Industrial Average crossover on the 50 line on the RSI. We just went negative. We did not hold the 50-day. We just went negative. We just have a crossover here. Technically, the Dow Jones Industrial Average today is going to show that it is bearish. But we have a pretty good futures looking right now that things are looking like they're going to bounce. If they bounce, you will probably not see your third technical crossover down here on the MACD. That will flatten and disappear, and we will technically not have technical crossovers. Today we do, but as the averages move along, don't be surprised to see that disappear, and we'll still continue our bullish trend. On the S&P 500, technical crossover. The 50-day held, but a 5 and a 20, a 15 and a 30 would have crossed over there. A definite crossover right here. Our S&P 500 technically today crossed over bearish. And because down there at the MACD, we do have such a significant crossover right here, it might look like something like this or something like this, where there's just a little bit of space in between. Might look like something like this. But we technically will be crossed over on the S&P, and that will not flatten itself out. And then the NASDAQ, same thing. Crossed over, held its pivot point, definite crossover here. We do have bearish crossovers on the S&P, on the NASDAQ, and that also will not flatten out. So technically, we have 2 of our 3 major indexes that have crossed over bearish. I still think the S&P will end up July 3% higher. Those gains will come next week as we have a lot of the FANG stocks and technology start to report. Earnings this week, IBM and Zions reported today. tomorrow, Halliburton, KeyBank, Philip Morris, Interactive Brokers, Intuitive Surgical, Netflix, a bellwether. United Airlines, if you're looking at the airlines, two to pay attention to. Wednesday, HOG, which is Harley Davidson, Johnson & Johnson, CSX, Discover Financial Services, Kimber Morgan on Wednesday, Las Vegas Sands, Texas Instruments, Valmont, Coke, and Verizon. Thursday, you have Abbott, you have Alaska Airlines, American Airlines, AT&T, Crocs, DHI is DH Horton, Newmont Mines for Thursday, Nucor, which is the silver, not the silver, the steel, excuse me, and Energies, Love, United Air, and Southwest Airlines on Thursday, UNP, United, it's a UNP, the railroad system is on that one. Sam, if you're into drinking, Samuel Adams, Intel on Thursday, Snap and Twitter, Friday, Honeywell, Kimberly Clark, and Schlumberger reporting. Economic reports are kind of quiet this week. The NAHB housing, building permit and housing start on Tuesday. Existing home sales leading indicators on Thursday. Internationally, we have Japan and China, but really, Thursday, the ECB has their interest rate change. That's the one that you're going to pay attention to, that things are going to be moving. We did a little trade today. Today, we sold off our Visa Leap calls. Our Visa Leap calls, because we could get $31.87, sold them off this morning at 11:04 Pacific Standard Time. Another group at 11:25. Kevin, why did you sell these ones off? These were the June 22s, little running out of time. Sold off 144 contracts. Some were sold at 31.87. Some were sold at 31.90. Pretty cool on a $20 to $22 cost basis. We basically made over a 50% return on those positions. Then I bought back in on half of them. And these I bought us more time, went out to January 23. Pretty neat. What I paid $24.70 for, or $24.32, are now worth $27. Some pretty darn good timing there, doing nothing more than playing daily lows and daily highs. I will add another 55 contracts of these leap long calls that act like stock replacement strategies tomorrow if we continue to see the futures in the market head higher. But basically took a 55 to 60% return on these, put half back on, and I'm already up $3. Not, almost a 10% return. Pretty cool to be able to be in those positions. All right, what else do I have for it? I've got some really interesting reports. I had Keith go over this, but I want you to spend more time. The Dogecoin creators explained why cryptocurrency is a joke. If you want to understand why you should not be in cryptocurrency, this is the article to read. They basically said what they created was a joke. It's ridiculous to be in it. What they did is a joke, has made them rich. But if you ever want to understand why not to be in cryptocurrency, this is the article for you to read. It'll give you an idea of the risks that you're in. Wall Street analysts see these risks causing a growth scare for global markets. Please take the time to read through this. I found it interesting on what they're talking about, but it's labor shortages and inflation. Really make sure you go through and read what you're looking at here and what the market risks are. Again, it doesn't mean that that with some stimulus, we might not get one new hurrah. Inflation jumped to the most in 13 years yet markets are largely ignoring it. This is an excellent article to see where we have targeted inflation. Used cars, energies. Do read through this and you'll get a general idea of why inflation is not broad-based. It's specific to certain areas. Surging prices for used cars, gasoline, food, and air flares are driving the jump in inflation. Just another article that will reinforce the one up above it. And last but not least, someone sent me a really interesting article on some of the worries that China's up against. If you want to understand where China sees themselves in the world and their risks, a pretty good article to go through and understand where inflation is going to be hurting China and where the country will go as a whole based on their country. So pretty interesting articles. Spend the time to read it. I probably won't get it posted till tomorrow evening. Are there any questions? Are there any questions about anything that I can answer for you guys today? All right, guys. Hey, I want to wish you a good evening. I'm going to see how I feel tomorrow to be able to do the trade findings and adjustments. Diddy, make sure you get a hold of Keith and set up a time that next week we can give you a little presentation to kind of work our numbers so we show you where we're at. I think, Randy, I will talk with you on Wednesday. Ida made a comment. Please read Kathy Wood's article on Dogecoin and discuss with us later. Ida is pretty simple. She bought into it and she's trying to promote through her hedge fund cryptocurrencies in general so she can get out for a profit. Kathy Wood is really, the chick kills me. But I think I put an article last week or the week before on Kathy Wood's comments on cryptocurrency. I 100% disagree with her, and I can't find the numbers that she justifies anywhere. It's bogus news so she can get people pumped up and into it so she can sell out herself. All right, guys. Hey, appreciate you being here tonight. Look forward to seeing you Thursday morning. Have a good day, and I'll look at those emails tomorrow to find out exactly how I'm going to work trade findings and adjustments. Appreciate your time. I do hope this was helpful. Have a good evening, and I'll talk to you on Thursday or tomorrow night. Bye-bye.